The question tells us Mr. ABC purchased a truck on hire purchase system from M Limited on 1st Jan 2010. The details of the transactions are as follows. Cash price of the truck is 56,000. On signing of the agreement, rupees 15,000 was paid. Balance was paid in 3 installments of rupees 10,000 each at the end of each year. 5% interest is charged by the vendor. Depreciation is charged at 20% annually on reducing balance method. Prepare the necessary journal entries for the transaction. So here we find out that ABC is the purchaser and M is the vendor. And cash price we saw is 56,000. So that is the price that you would have paid had you purchased this machine or this truck on hire purchase. We also saw that 15,000 was paid at the time of signing the agreement. So what is 15,000? 15,000 is nothing but the down payment. The details of the balance payment has been given to us, and if the remaining amount was paid in 3 installments at the end of each year. 5% is the interest which is being charged by the vendor, and we also saw that depreciation is computed at 10% based on the reducing balance method. Now let's go about with this particular question's calculation. Okay, let's go about with this particular question's calculation. Let's look at the cash price. How much is the cash price? Cash price is 56,000. Okay, so cash price of the machine is 56,000. Then let's look at the down payment. Down payment is down payment is 15,000. Now, how do we know this is down payment? 15,000 is the amount that has been paid at the time of signing the agreement, and then the balance amount is paid in 3 installments. 3 installments is a 3-part payment, and then the amount per part is rupees 10,000. So this has been, and plus 30,000. So this has been paid, and this works out to be 45,000. So this works out to be 45,000. So this is how. Okay, one small correction in the question, dear students. The part payment, the amount is 15,000. Okay, the part payment amount. There is a small correction to that. The part payment is 15,000. Okay, so part payment is 15,000. Please make a note of that. The part payment is 15,000. So let's just quickly go back. So here it is 3 into 15,000, which makes it 45,000, and the total will work out to be 60,000. So if you notice the difference between these two, that is the difference between the difference between the 56,000, and this will work out to be your higher charges. Okay, that will work out to be your higher charges. Now let's move on with the calculation of the interest. So for calculation of interest, we start off with cash price of the truck. So cash price of the truck is 56,000. So from this, we will have to subtract the down payment for the truck. So down payment for the truck is 15,000. Okay, so when you make the down payment for the truck is 15,000, and then when you do so, you would get amount outstanding on 1st Jan, amount outstanding on 1st Jan 2010. So amount outstanding on 1st Jan 2010, this was 56,000 minus 15,000, which was 41,000. So this is 41,000. Now to this, we have to add interest for first year, which is 2010. Okay, so which is going to be 5% of this amount. So 5% of this amount This will work out to be 2050. Okay, this will work out to be 2050. Now, from this, we have to make the part payment for 2010. So part payment for, we have now, this will be, when you add interest to 41,000, this will be the amount outstanding on 31st December 2010. So the amount outstanding on 31st December 2010, this will work out to be 43,050. From this, we have to subtract the part payment. This has to be the part payment for 2010. So part payment for 2010, we see that this is 15,000. We see that this is 15,000. So that has been paid. When you do so, you would get the amount outstanding on 1st Jan 2011. So you would get the amount outstanding on 1st Jan 2011. So this will be 28,050. Now to this, we have to add interest for 2011. So we have to add interest for 2011. So this will work out to be 41,402.5. So this will work out to be 1,402. So this will work out to be amount, when you add interest to this, this will be amount outstanding on 31st December 2011. So at the end of the year, the amount that will be outstanding is 29,452.5. So that we have. Now from this, we have to subtract part payment for 2011. So part payment for 2011, this is 15,000. So this is 15,000, and for 29,000, when you subtract 15,000, this will work out to be amount outstanding on 1st Jan 2012. This will work out to be 14,452.5. And from this, we will have to subtract the interest for 2012, and interest for 2012. Please remember, we are computing the balancing figure. Now, why are we taking the balancing figure here? If you would notice, the actual interest, if you were to calculate at 5% on top of the outstanding amount, you would notice that the interest would work out to be 722.625. When you add that to 14,452 and 722, you would notice that the total outstanding amount will work out to be 15,175. But what you have to remember is that with the third year, the transaction is coming to an end. You cannot afford to have any more outstanding expenses. You can no longer afford to have any more outstanding expenses. So with that, we will have to wind up with the third year. That's the reason why we are taking the balancing figure. So how do we calculate balancing figure? 15,000 minus 14,452.5, and that will work out to be 547.5. Okay, so this is your outstanding interest amount. Okay, this is your outstanding interest amount. And from this we will have to subtract the final part payment for 2012, and the final part payment for 2012 is 15,000. Okay, this works out to be 15,000, and then the amount outstanding It works out to be 0. Okay, so with that, we have computed the calculation of interest for this question. The next calculation that we would be carrying out is the computation of the cash price in each of these part payments. What happens is the part payment of 15,000, in that 15,000, certain portion of the money is going towards the cash price, certain portion of the money is going towards the interest. Now we need to know this breakup. So that's the reason why we are doing this calculation. So in 2010, we know that the part payment was 15,000, and out of 15,000 part payment, 2,050 has gone towards the interest. Okay, so the remaining amount has gone towards the cash price. So the cash price proportion would be 15,000 minus 2,050, which is 12,095, which is 12,950. Okay, so that is 12,950. Similarly, for 2011, this will be 15,000 minus 1,402.5, and so from this we will have to compute 15,000 minus 402.5, so that will work out to be 13,000. That will work out to be 13,059 597.5. Okay, 597.5. That will give you the cash price component. Next one is 15,000 minus 547.5, and when you do so, you will get the cash price component, and the cash price component would be 15,000 minus 547.5. That will work out to be 14,452.5. So with that, we have got the cash price component for each of these part payments. Now the next computation that we have to do is we have to calculate the depreciation. We know that depreciation on the truck, okay, depreciation on the truck is calculated at 20%. And remember, we are also following the reducing balance method. We're following the reducing balance method for this particular computation. Okay. So let's start off with this cash price of the truck. Cash price of the truck, we know cash price of the truck is 56,000. Cash price of the truck is 56,000 less. So cash price of the truck in 2010 is, so from this we will have to subtract depreciation for 2010, and depreciation for 2010 is 5,600. Okay. So when you subtract this, you would get the value. You would get the value of truck in 2011. So value of truck in 2011 this will work out to be 50,400. Now for this you will have to subtract this depreciation for 2011. Now, when you're computing depreciation for 2011, you will be taking 10%. But 10% of what? 10% of the outstanding amount. So 10% of the outstanding amount is 50,400. So this is the. In the meanwhile, there was a question: how did we get 5,600? There was a small correction to that. It's not 5,600. It should be 11,200. Okay, so depreciation is calculated at 20%, not 10%. So that has been corrected, and let's calculate. So this will work out to be 44,800. Okay, 44,800. Now what we have to do is we have to calculate the depreciation for 2011. Depreciation for 2011, when we calculate, we will be taking 20% of the outstanding amount, and the outstanding amount in this case would be 44,800, and that will work out to be 8,960. Okay, that will be 8,960. So value of truck in 2012. Depreciation for 2012. Value of truck in 2013, and this will work out to be 35,840 minus 7,168. That will work out to be 28,672. So that we have computed, and we are only interested for the first 3 years, and for which we have already calculated the interest. Entries. Now we have to start preparing the journal entries for this particular question, and let's start looking at the journal entries now. The very first journal entry that we would be passing, that would be on 1st Jan 2010. And this first entry that we would be passing, that would be for the payment of the down payment. So that will be truck account debited. We saw that the part payment was for 15,000. Down payment was for 15,000 to cash account 15,000 being payment of down payment for hire purchase. So we have confirmed the transaction with the payment of down payment. Now, following this, the next journal entry that we will be having, that would be on 31st December 2010. So the first entry would be for part payment becoming due. So part payment becoming due, we will have to consider the cash price, and the cash price of here, for here, this would be so we will have to consider the cash price, and the cash price component from the first part, that will be truck account debited, and the amount would be 12,950. Interest account debited, amount here would be 12,050, 2,050, and this amount is becoming due to the vendor. So to Mr. M account, the amount is 15,000. Being part payment for 2010 is due. Then the next entry would be for processing or releasing the payment. So for releasing this payment, this will be 15,000 to cash account, 15,000 being payment of part payment for 2010. 31st December 2010. Depreciation account debited. Depreciation account, so depreciation for the first year, that is 11,200. So the depreciation amount that we are charging for the first year, that is 11,200. So that we have computed. To truck account, 11,200 being depreciation charged for 2010. Then on 31st December 2010, another thing that is going to happen is you will be transferring all your expenses to profit and loss account while you go about with the preparation of your final account. So what are the expenses you have to transfer? The expenses that you have to transfer are your interest. Interest is 2,050 to depreciation. So this will be 11,200. So this will work out to be 13,250 being transfer of expenses to profit and loss. Okay, so with that, we have completed the journal entries for the very first year. Now what we have to do is 31st December 2011, that is when we have the next entry. So truck account debited, and the amount is 13,597.5. Interest account debited, $1,402.5 to Mr. M account, 15,000 being part payment for 2011 is due. Then 31st December 2011, Mr. M account debited to cash account, 15,000 being payment of part payment for 2011. 31st December 2011. Depreciation account. So we will have to calculate the depreciation for the second year, and the second year's depreciation account is 8,960. To truck account, 8,960 being depreciation charged for 2011. 31st December 2011. Then now the final entry for 2011 would be you'll have to transfer all the expenses to the profit and loss account. So profit and loss account debited to interest account. So what is the interest amount? Interest amount is 1,402.5 to depreciation account. Amount here is 8,960 being transfer of expenses to profit and loss account for 2011. So let's add up this together. So 8,960 plus 1,402.5. That will work out to be 10,362.5. So that we have completed. So with that, we have completed the journal entry for second. Now the final entry would be for the last year, which is 31st December 2012. The very first entry would be for the part payment due, and the part payment due transaction entry will be showing truck account debited. Amount is 14,452.5. Interest account debited, and interest amount, sorry, this has to be 2. Oh, I'm so sorry, that was correct. Interest account debited, and the amount is 547.5, and the amount is becoming due to Mr. M, and the amount is 15,000, being part payment due for 2012 is due 31st December 2012. So now we have to release the payment. So Mr. M account 15,000 to cash account 15,000, being payment of part payment for 2012. Now 31st December 2012, we have to charge for depreciation, so that would be depreciation account debited, and depreciation for the final year would be 7,168 to truck account 7,168, being depreciation charge for 2012. Then finally, we have 31st December 2012. You have to transfer the amounts to profit and loss account. You have to transfer all your expenses to the profit and loss account. So which are the expenses we have to transfer? You have to transfer interest account. Interest is 5,407.5. So you have to account for depreciation. Depreciation account 7,168. So this will, the total will work out to be 7,715.5. The transfer of expenses to profit and loss. So with that, we have computed the expenses. We have completed the journal entry for these 3 years.